All right. Yeah, Minim up 800% this morning. Holy shit. And stair stepping perfectly. If you're an intraday day trader, you know what to do. Let's see. Gonna take a look at some of the other opportunities here. And we're also watching Oli. LQR. Is that a real estate trust or something? Was it LQR House Marketing Services? Oh, that's just because of something's have to do with the split here. What did it do? 100-to-1 split? Are you shitting me? A 60-to-1 split. Reverse split. That's hilarious. SMFL. Smart for life. $1.38 to 384 and then pulled back 50%. What is going on there? Float 43,000. Volume 1.7 million, and it only has a 40,000 float. Something's bullshit here. Well, I would like to see how that performs, because that's about the craziest metrics we've ever seen. SMFL. I think it won't, I don't know what it's going to do. It's going to implode. Ampy. Good morning. Looks like the coin trade is over for now. Did I alert a coin trade? What are you talking about? Let me see. Oh, are you still on a runner on coin from like a month ago? Coin. I know we're selling the Iron Condor. But that's definitely not over. Let's see. I'm scrolling back looking for anything on coin. Sell Iron Condor on coin. No. Not seeing the coin trade. Been holding calls for a week now? For a week? Well, that's your own trade. So you're just asking about for yourself. Oh, okay. But you said the coin trade as if it was a trade. Like, it certainly was not one. There certainly was not a coin trade. Um, you got extremely lucky. Didn't I alert it? A while back, and you might be on a runner. I think. Let me see. CS deck. You might be confused. Oh wow! I hope you're not grabbing alerts on the Iron Condors and the put credit spreads. Well, a put credit spread is a bullish take. DraftKings, AOI, Beyond, Weaver, Carvana, Roku. I'm going all the way back to November 2nd now. All right, just in case you've been taking trades that you shouldn't be taking, make sure, okay, you probably see, like I have coin, sell, IC. That's an Iron Condor. That's an options selling trade, not an options buying trade. You're making money selling options to other people. That's a different. That's an options trade. You should not be taking that as a call. And I'm trying to look back if there was any other coin alerts. I just want to know which alert you entered on. Oh, maybe it was okay. Well, on the 17th I said to sell Iron Condor on coin. On the 17th, let's look at that. See, that's right back here. You know why? Because I noticed it was tightening up. So that was right here. Okay. And what I'm saying here is to sell the puts and also to sell some calls way up here. That's what we did. This is to put credit spread, call credit spread. We got that on the 17th. Price moved all the way up here. We had to close out the call side. The puts kept going, and we liquidated those like yesterday, and then now we're back in an iron condor on it again because it's so elevated. But those are option selling trades on margin. Those are to make money off of time premium. That's not directional. Now, that said, yeah, coin's probably topping out, but maybe, it's hard to say. And that's why selling option spreads on these is much better, because when you sell them, it doesn't matter if it goes up, down, or sideways. It's all good for you. You hopefully be part of those classes and understanding that. But as far as topping goes, yesterday was it was a doji. Dojis just can be pauses in the road. I mean, it doesn't necessarily mean that coin is done skyrocketing necessarily, but it was certainly nice to see a topping tail type of candle on coin since the run started a week and a half ago. So, yeah, I mean, I think, it could be done up here. But, I mean, the way we trade, if we're long, which I did not alert along, but if we're long, or maybe I said, we're going to sell put credit spreads or an iron condor back here, but if you want to go long, you can go long. Maybe I said that, and there's no actual alert. If you're long, then, you always sell 50% by day 5. 1, 2, 3, 4, 5. That was 2 days ago. And then you leave the other 50% on as a runner. You also, up to day 5, should have been selling little partials on any days that were above ADR. ADR percent, typically, above average range days, which there were 1, 2, at least 2 or 3. So you should be like 50 to 60% out. And then 2 days ago, it moved even more. You probably should have sold another 5% there of what you had left. So you're down to like 40 or 35%. And then yesterday, the topping sign, I mean, you're just on a runner at this point, though. And the runner, I'd follow the Kama line, which is the 5, which is almost the same as the 5 moving average. So just follow the 5 moving average if you're on a runner, which you should be. It's just like leftovers. You should already have made the bulk of your profits. All right. And when you go long, ideally, you should not be using options. But, that's your own choice. You should not be trading options long. You should be using shares. So now it's going to open below yesterday's low, and that's something. That'll be a first. There's been no opens below the low except for the last pullback. But it's, understand it's very bullish. So it's not a short. Let's be, clear about that, just because it's way up high. But the thing is, at a certain point, a stock in an extended run is either done, and then it's going to fade 50% of the move, something like that, or it's going to struggle to go further. There's just the demand isn't there, and so it starts to chop, right? And that's the perfect situation to sell calls. What's called like a call credit spread is good, because then you don't have to spend so much money. If you sell calls, you have infinite risk. But if you sell a call credit spread, it's only like $300. It's like buying the option, And you'd be making money every day that the stock struggles. You'd make even more money. You'd accelerate the gains towards the reward that you set up with your selling in calls. If price goes down, that's even better. So sideways or down is what you'd be looking for, and you would sell like something like the 140 level, for a month out, month and a half. The ideal length is, a month and a half, but, you could do a week, you could do whatever it is, your style is, that's fine. Anyway, Does that help you understand what you want to do with your position? Because I don't know specifically what your position is. Like you said, you had calls, option calls, which I think is very dangerous. I would have got shares. But you know, you manage your trade the way you manage your trade. I'm not the head of your household. You are. Okay, good. Yeah, that was a pretty detailed analysis of the coin position. I mean, I alerted yesterday, I alerted to sell Iron Condor, IC. If you see that in there, sell IC. IC means Iron Condor. You always go heavy with options. Well, be careful, buddy, because the Greeks will fucking kill you. You know, the Greeks on the options are just, just terrible. That's why, it's better to sell them than to buy them. All right, back to opportunities here. AMPI, CMND. No. And CMND, ADTX. Oh, God, we have very little time here. I really wanted to get down to, what was it? Something way down there. Fucking, what was it? Come on, it's not even on the list anymore. Oatly and Snow. Okay, so please don't let me forget Snow, guys. ADTX fully faded a blip. A big move up, and it's just about damn near fully faded it. I don't know, it's still loading some data here. Well, it's 70% faded it. So whatever's going on in ADTX, it's kind of dead. Saito. Saito normally does decent volume, so that's why we're looking at it. Altamira Therapeutics. It pays though. That's good. Yeah, as long as you've got something, everybody can figure out their own sort of thing. 20 cents all the way to $1 on Saito. So 500% gains going on there. Actually, that happened yesterday. 20 cents to $1 throughout the whole day, Saito. This morning it's down. So screw that one. All right, I want to take a look at, CRM. What's going on over there? And Snow. Edward Snowden LLC. No, that's not what it is. CRM is right at the breakout point, and earnings came out. And, I sounded like one of those air popper things. And it is up 9% pre-market here on the earnings reaction. So far holding. It did run all the way up for a whole month up to this release. So the pressure is on. There could be selling pressure, but the interesting thing to note is this is an episodic pivot. It's a pivot breakout at the breakout level. I mean, this is just outstanding. Unfortunately, it's only a 1.64% ADR type of stock, but this could turn into a swing trade that's worthwhile because the volatility could go way up. The amount that it moves could go way up now that it's potentially in a new league here of performance as a growth stock. However, you got to focus on the two entry methods on something like this. Number one, the expectation today is for it to bleed out and sell off. Number two, it's way above episodic pivot break. It's way up above there. It's catalyst day pivot breakout. Let's check the relative volume really quick. CRM, where the fuck are you? There you are. It's done. CRM, 500,000 shares. Normally does about 5 million per day. So it would need to 10x that by the end of the day. Projections are that it won't. So it probably is going to sell off. The relative volume isn't there unless suddenly at the open there's a huge shift in demand. Okay, you can watch that in the first hour. You figure that out. But what we expect then, because the demand is now outweighing the typical move in volume, is for it to sell off, and so you would want to focus maybe on a 5-minute dip buy. However, pivot breakout at 253 would be a pre-market high. Pivot breakout at 253 would be a definite entry signal with stop at low of the day or something like 250 or even 249. Okay, 249 stop, 253 breakout, $4 of range. Could end up at 300 by the end of the day. But if that doesn't happen, and a 1 minute breakout also, if either of those don't happen, or fake out, and make sure you exit if that happens, and you're going to have to take a few punches potentially to get into this thing maybe, then you get the 5 minute dip buy. All right, I will focus on that CRM as a nice quality play. I wouldn't call it like, a back alley play flipping bottle caps and shit and trying to make a fortune flipping bottle caps. I mean, this is a quality play, so it's not gonna give you, thousands of percent gain or anything. It's just because it's a quality pick. It could be well controlled. It could do what it needs to do. Institutionals are going to be all over this stock because their clients would be like, "Why the hell did you not get into Salesforce when it reported unbelievable beat earning?" You know what I'm saying? So institutions are going to be on this like Google, like Apple. I mean, they're going to be all over the allocation on this. The question is, are they already allocated and they're going to sell some today? Are they going to hold? How's that going to play out? So it's a quality stock. Once you get in for a swing, it should move in a controlled manner and with quality. Okay, CRM. Let's keep that up here. Oatly. Let me talk about Oatly for a second. Oatly IPO'd in 2021 at like $20. In the next couple of days, in about a month, it went and hit $28. Oatly, O-T-L-A-Y. Why did it hit $28? Because everyone believed in it being an incredible company that would eventually be profitable. What happened almost immediately was the profitability just wasn't there. They overestimated that the company could make money. So it went from $28 to 40 cents over the course of the next 2 years. $28 to 40 cents. Well, guess what? They just turned their first profitable quarter. And the stock is up from 44 cents to over $1 now. So that's about 100% gain from the lows. And that's been going on over the last like 2 weeks since earnings. But today it's like it just keeps getting bought up. Something's going on there, right? It's getting bought up. So investors figured this thing's worth $28 2 years ago based on that it would be profitable. What happened to Tesla when it finally became profitable? You know what I'm saying? So if this is $1 right now, and it could be $28 or more on an IPOU breakout that took 2 years to come back around to it, then you've got a really good risk reward value play here on Oatly. You could lose all your money. It could not work out, for example, or you could lose half your money on it, whatever it is. So, you locate really small, 0.25% of a, investment portfolio, et cetera, something like that, 0.5 or even 1%. So you keep it small. But the thing is, it could be up 2,800% in a year. Maybe less. I mean, if the market starts to run. But maybe a year and a half. So that's something, you can put into the IRA or something. It just depends on, the risk levels of whatever your portfolios are. Again, as I am not, a certified advisor, and I'm not assigned to you as your financial advisor, and I'm not one, So this is for your own personal informational purposes only, as it says in the disclaimer everywhere. But these are ideas, in my 25 years of experience, how you could look at this stock Oatly. All right, the market's going to open in just a few minutes here. The market reacted strongly to some numbers, apparently, coming from the economic root of things. And we're back at yesterday's lows. We were already retraced up a third, but the pressure is on right now. I mean, we were at a consolidation area on the market, if not a top. And by the way, Minim, M-I-N-M, just keeps stair-stepping, although now it's starting to look a little bit sketchy. But Minim, Jesus, this is like, it could be $40 and halting all the way up on Minim by noon. I mean, if it keeps going, you've got a traded thing. But Minim, insane, up 1,000%. Stair stepping up every time. Beautiful chart. Minimum for anyone who's an intraday day trader. That's your primary target. And then, like I said, quality CRM, swing trade entry potentially. I want to watch SMFL because it's fucking crazy. And then Oatly as an investment, type of trade here. Oatly's a little bit lower volume, so low liquidity. So that would be just, for as a trade, and not as a trade, rather, as an investment, rather. All right, market's opening. There we go. All right, market's bleeding out right away at the open. All markets bleeding out. How does that look candlestick wise? That's good. And it would be based on these movements, it would be just ridiculous if we created a bullish engulfing candle today over the top of yesterday. That would be a definite, this consolidation area is over kind of thing. But that is probably a 5% chance. So there's a 95% chance that the markets are under pressure again today. I would say very, very strong chance. All right, you guys, I can't, hold your hand and be your babysitter on your trades. Those are the opportunities this morning. That's what I'm here for. Now I've got to look at my trades and manage what's going on over here. You guys let me know what you got into and how much money you're making. All right, I got to take a look at FIVN. What's going on there? Okay, FIVN's doing fine. And what's up on UNH? That's not looking good. Let's see. All right, it's not doing terrible. How many days to expiration? 15. Yeah, might have to let it go soon. And the Disney holding. RJ, you put those on the other day. You got to let it settle in for a few minutes, sometimes even 5 or 10 minutes right at the market open. But how have those settled in now? Are you looking at your paper account? What's happening this morning? Are you getting some of that theta decay? Are they up? Just out of curiosity. I forgot what you got. I think you got 3 things. Okay. All right, Disney's popping up this morning, but where is it on the overall here? Okay, it's kind of dojiing at yesterday's low. No, it's even higher than that. Okay, there we go. All right, Disney's doing fine as far as mitigating that trade. Yeah, everything's working out over here for me. What is going on Riot? Could that even be possible? I don't think so. The options are being wackily priced on Riot here. What do I got on Riot? I think 14. Yeah, 14 by 12. Okay. Everybody else, how you doing, Bob? Rusty, how's it going? Something else I need to check on is now. And There's still 50 days to go on now. I've got the 720 upside. That's doing perfectly fine. Okay, we just let that bake. Sit and bake. They're all up nicely. I'm just trying to prove it to you, you know? I think you're going to find that if you master this, it's going to be a much better low stress way for you to put your money to work while you're at work. I think you'll see. Because, you know, remember the ROIs I said, like, for example, one of them was like 45% potential gains in something like 50 days. Let's call it, that's a percent a day, right? Thing is, you want to close it management wise, typically, once you hit 50% gains. But the thing is, you usually hit 50% gains before or at around 50% into the time that you chose, 50 days. So that means that even though you're only getting half the gains you hoped for, you did it in half the time, which means it's the exact same gains per day. In other words, it's the same exact annualized end of year return on your portfolio and return on your capital. Whether you wait another, the full 50% or not. But the point is with these things is you don't want to be holding them during their last days of expiration, their last few weeks. So that's why you cut it halfway in at 21 DTE or at plus 50%. And then you just push that money onto something else with 50 days left on it. And you just keep doing that. And you keep taking that, you keep going from 0 to 50%, 0 to 50%. It's the same thing as going from 50% to 100. It doesn't make a fucking difference. So hopefully you can make it to class tonight. I'm going to be talking about a lot of cool things, how to manage those things, and we'll probably be going over a lot of these, the concepts of it all kind of again, because I think everybody needs to understand. Like, I couldn't believe how much RJ doesn't understand what the fuck he's doing with this. It just shows that it's really difficult, and I know it too, because I've done this hundreds of times, and it never clicked like it has most recently. So I know how to do them. I know what they are, and I know the assumptions and everything. But it's like to actually master it. I feel like I'm on top of it. I'm in control, and I would have to be. I have like 30 of these positions on, rotating, being managed, adding, subtracting to 30 of these positions for weeks and weeks now, and it's going really well. So tonight, yeah, it's the buying of the other side of the strike that really threw me off, and that's just, I think, something that I can explain that in a way that you'll comprehend it and never forget tonight. I know how to explain that. Because once you can understand the concept, then you know what to do. You wouldn't not, it's like, I don't know, learning some habit in your life, you need to do the thing. Otherwise, like take the trash out, at least once a week, if not every day or every few days, because it leads to cockroaches and bad smell and whatever, So, but if you didn't know that, and somebody told you, take out the trash every week, right? And you go and you live on your own, and your parents always said to make sure you take out the trash at least every week. You don't know why. So it doesn't happen. You have to know why. Why is the most important question you can ever ask in life. And the most important question is, why are we here? No, it's not. I don't know. But it does start with why. Let's take a look at the minim. All right, minim's just hanging out around 8. I would put like a stop at 750 if you were going to try and play it. And it did pop and hit like 10. 10 is like the next go crazy point. $10. If it breaks 10, stop at 750. I said stop at 750. $2.50 stop. That could be a day trade on minim. But all my money is allocated to spreads. On all great stocks, Riot, Avgo, Monday, Now, Square, Affirm, Tesla, Lululemon, Amazon, Coin, MSTR, Palantir, Netflix, Microsoft, Abercrombie and Fitch, UNH, Five, and Disney, Home Depot, The Market, and what is Save? Southwest Airlines, I think. So, it's not like I'm not playing anything interesting. I'm playing the stocks too. I'm just playing them smarter. Like over here on Coin, yeah. I mean, selling a vertical call spread on Coin right now looks to be great. This is the first time in the run that it's struggled to make further progress. You can bet on that. And if it doesn't work out, you take it off, right? I mean, everything is a fucking trade in life. You have to manage if it doesn't work. But the opportunity here was not seen on these prior days that kept going. Now we can see Coin is topping. So now you sell a call vertical. And, you could do that for next week's expiration and just take a day or two of gains on it and cut it at the end of the day today or even on Monday or Tuesday. So I'll take a quick look at that because maybe I'll put a little on that. I do have a little teeny bit. I can probably do a contract or two. Let's see. Would you guys like to see that? Let's see. See that process? I can share my screen. So we're looking at Coin. And I go over here to trade all products, Coin, and then I get the option chain, right? And then I can see next week. Well, I can see tomorrow. Might as well check tomorrow. Also, you just take 1 day trade, a 1 day's worth trade, 1.5 days could go to expiration, right? And then you're looking for selling something like the top there, 131. But it probably doesn't pay, but let's see. All right, yeah, you can get 77 cents per contract. The delta is 20. That means an 80% chance of profitability. So then I click the bid. That brings up the sell option thing here. And then I cap that trade at 132 by buying. I hold down the control button on my keyboard. Hold down the control button, and then you buy the next strike out. That limits the infinite loss. And so now it says, if I do that, I think I did something wrong there. Yeah, let's do that again. Buy 131, sell 132. I can see that for 19%, for a 81% chance, I can get $13 for $87 of capital I have to put up. So that is 13 divided by 87. That is a 15% return in a day on an 80% chance. And so, it's already moving. There's 13 again. And so now you ramp it up to what kind of size you want. Like, let's say I sold 10 of those contracts. Now we're talking about going to make $130 for putting up $870 of capital. $130. It's almost a sure thing that by tomorrow, Coin is not above 131. That's basically how you're making money on this. By the expiration of tomorrow, Coin is not going to be above 131. We kind of already see that. This is the end of a run. It's so extended. I mean, see, as technical analysis traders, you're able to leverage these spread trading techniques and gain an edge, much more so than just taking random probabilities, which a lot of spread traders do. They don't even look at charts, but you use technical analysis and you're ahead of the game. So let's see. That would take up almost everything I have available in my available funds. So I might as well just max it out. Fuck it. I was going to take a longer, something like selling the top here for a week. But, and maybe I will do that. Let's just go take a look also at next week's and see what the price is on that. So the 131 top on that, currently $2.50, but then you sell the next one out at 132. And the probability on that is 30. So that means it's 70% probability. And we'd be getting 23 cents for 77 cents. $23 divided by 77, we'd be getting 30% return for 30% roughly for a 70% shot. So that's excellently priced. That's more accurately priced right there. And actually now it's 25, so that's even better. 25 for 75. That's really great. That's 33% return. So that's what I'm going to aim for. I'm going to aim for the 25 cents, see if I can get any fills on that. And then I just buy a bunch of those contracts. 20 bucks for 30 contracts, which is 15. You're selling twice. And I can get even more than that with my allocation. And so I stand to make 425 bucks total if this was an easy trade and I could let it just expire next week. So confirm and send. We'll start to get that trade to work. I must have went below my buying power here. Okay, let's try that again. I don't know what my buying power is right now. 131. Anyway, you can do that. And then what I was going to tell you was something to do after that. Wow, 26. Boy, the pricing on this is just getting better and better. I don't know. Can I get 5? Let's see what it'll let me do. Let's try 5. Okay, 5. It's running 5. That's good. Let's see here. Let's up that to 10. Will you let me have 10? Wow, 29 cents. This is amazing. The pricing on this is fantastic because it's going to be 29 cents for 71. That's 29 divided by 71. 41% return on capital in 1 week. You know, but you don't expect that. It's just because you're probably going to sell it early. But yeah, for a 30% chance, now you're in positive EV territory. Very excellent. The only thing is it's not getting filled. So, you know, that's a dream sometimes. So we probably have to adjust the price down a little bit. Let's try that 25 cents. It's allowing me to go for 10. Okay, I got filled. I don't know what I just got filled at. Let's see. Where is that? Right here, coin. Oh, it'll show me my filled right here. Yeah, I got 25 cents. That's awesome. So that was like, forget, 33%. Yeah, 33% return. And that's for next week. And so just like that, and what that looks like is I go over to coin, and we can look at just that if we want here. Yep. So we just sold the top, and you watch me do it in live time. Is that something you guys are interested in? You guys are still watching, so you're not bored. Oh, I think I haven't gotten filled on all of them yet. Oh, yes, I did. So that means, you know, I'm looking at 250 bucks of gain. That's why you put on like 50 of these trades, not just the number of contracts. I'm talking about you do these lots of them all over your account. Like you want like 30, 40, 50 positions, lots of little positions. That's how you get your statistics to iron out in the short term so you don't get hit by variance. So anyway, 250 bucks for 750 bucks of capital. That's pretty good. Can you imagine? Like if you spent 750 bucks on buying Apple shares and you were expecting in 1 week to make 250 bucks, that'd be like Apple going from 100 to 133 in a week, you know? So then as you can see here, it's got a theta of $6 per day on those, and that will accelerate every day that goes on, that goes forward. Is today the 30th? Yeah. Actually, it's $8 per day. So that one position is $8 per day in income every day and accelerating to the $250 mark parabolically. Good? You guys like that? Me showing you that? That's it, you know, and you just set that up in your account and then you just let it bake and trickle in. I mean, you know what you did. Oh, I'll show you something else too in just a second here. But you know what you did. You know, you sold the 131 top here. It's pretty tight. You're not putting any room for, you know, You could have sold the 132 or the 135. You would have got less return for the same amount of risk, a little bit even more risk. Not risk, but capital, which is your risk as well. Just like when you buy Apple, if it goes to zero, you lose all your money, right? So, but you're going to trade it out before it ever would do anything like that. Ideally, it is also capped, so you already know what you could stand to lose. Now, the other thing I wanted to show you is now that we did that for free, for no extra money, now I don't need to have the capital. For free, for no extra money, I can sell a put credit spread of the same width and number of contracts for no extra money. It requires no extra capital. It's like a ghost trade. And we call that an iron condor when you do that. When you do what I just did, but you do it to both sides of prices for a week. Now, if we look at this probability cone on my chart on the left here on coin, it projects out a 1 standard deviation, which is the statistical probabilities that you'll see in your options chain, and 2 standard deviations. Now, coin has been moving at a rate of 2 standard deviations lately, very quickly, right? So you kind of got to plan, for potentially a 2 standard deviation target by the end of next week, to the downside at least is what we're thinking. Okay, so from here that would be December 8th, next week. What? How could that be in a week? Okay, today's Thursday. Yeah, December 8th. And so we go down here and we can see that on a 2 standard deviation move, that would be like the 102 level, which I really like. It's like underneath this area here, which has a lot of, that was basically the breakout level was 100. Broke out at 100. That's a nice support area where you could sell. The probability and the risk reward on that could be really low, but hey, it's free fucking money. So we'll check it out. But in worst case, you could even sell just the 1 standard deviation, which is like 112. So we're going to look at that option chain right now. All right, so now we go over to the option chain. And we look, if we sold puts around 112, that's a delta of 23. I mean, just 23% chance means, but we're selling. 23% chance of being in the money by expiration, but we're selling, and that's at 1 standard deviation. But we're selling, so we will get 77% probability of winning. Okay, so there's that. That's the 112. But what about the 100? It's a 9 delta, which means it's a 91% chance of winning. So I like that because it's just free, safe. I can bank on that. I can let that expire. It's 2 standard deviation move to the downside from here would be crazy. 1 standard deviation, at 112, good. But so what would we get out of buying selling the 100? Why is it not putting that on? Oh, because I'm not on the bid and the ask. Okay. And buying the 99. That's how you do it. So we're selling the 100, buying the 99, and we're getting 12 cents or $12 for $88 of risk. That is 12 divided by 88, about 14%. But more importantly, let's just go back to that 12 again. I want to keep that there. Okay, good. It's even moving around. Let's keep it at 12 for a second. And then we move that up to 10 contracts, which is exactly the amount that we're allowed to put on here without risking any further capital. Look at this. This is RJ. This is the fucking thing. I finally have recorded it. I'd love to send this into Schwab and say, fuck you. The button gets stuck. And look, it's going 74, 79, 80. Fucking you motherfucker. Do you ever do this, RJ? Anybody else who uses Thinkorswim? Does this ever happen to you? And then you sit here going, you motherfucker. Oh my God. When is it going to stop? It's literally stuck. I'm going to go to another app and we'll wait it out when it gets to like 1,100 contracts. Oh, maybe you guys can't hear me. Can you guys hear me? Am I still streaming? Maybe what happened was like there's been an internet cut. Maybe that's why it's stuck. Oh, you can. Okay, so it's not that. Oh, hello, Walkus. By the way, are you guys all following me? Like, do you understand what I'm saying? We're gonna have class on all, this, the foundations of all this stuff tonight. It's gonna be fun, but it's even better if maybe you already are starting to understand. Yeah, good, 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 Bob. Um, yeah, it's still going. I wanted to show you how you can get the free ghost trade on the other side using an iron condor. That's why you do an iron condor. Like when you see like me post an alert that says sell an iron condor, don't go like fuck that weird ass fucking shit. What we're really doing is what we just did, which is we're selling 131 level. And then the iron condor is just you're setting up a free ghost trade as well, an extra trade. The iron condor is merely twice the return as a normal trade. So when you see iron condor, don't dismiss it, as like this shit's just ridiculous. I'm gonna have jade lizard. The fuck is going on here? I'm not walking into this wonderland. No, thank you. I'm gonna need therapy. Um, but all it takes is for you to understand what it is, and then you're like, that could be quite tasty. Evans found something tasty. The other day, like yesterday, I found something that had a 55% ROC, return on capital. It's insane. I forget what was that. We put it on though. Let's see. 59% ROC on Melly. Did I even get it? Man, I sure hope I did. Look, it's still going. I'm going to force quit the app. Bullshit. Thinkorswim, you assholes, fix that problem, man. It's been 25 motherfucking years. Now they're probably not, because it was bought by Schwab. Schwab buying TD Ameritrade and Thinkorswim raised Schwab's level. If Schwab were to force TDA and Thinkorswim to come down to their level, or to meet them at their level, everything would suck on this planet. So, Thinkorswim is great, but if Schwab kills Thinkorswim, which has happened before in my life, in the movie industry, I used some software that was like the greatest software ever made for writing music for movies. And then what was it? Gibson Guitars bought the software company from the original creators. They didn't know this, but it was to kill it because they had their own competing software. So they killed it. And then, it went through antitrust and everything, but 17 years later, it's dead. It's gone. It doesn't matter, And so it was the greatest software. It did everything, was amazing. And then don't think that can last forever. It can be just taken away just like that. All of a sudden disappear. But I kept going with it for many years using like older computers and stuff, but that's the best you can do. And so Thinkorswim, that could happen there too. Let's see if I can put on the other side of this trade. You guys, you want me to do that? I'm going to try to relaunch Thinkorswim. Here's what Tasty Trade looks like, by the way. We'll take a look at Tasty Trade tonight. I'm going to close Tasty Trade. I just launched it as well. We'll take a look at Tasty Trade tonight as well. That's an options, expert options platform, is how I would put it. And they have incredible rates. Best rates just about damn near in the industry. Number one, they don't charge you to close your positions. That's pretty cool. So you only have to take one, you only have to pay fees on one side. And number two, they cap the amount that you have to pay. This is Tasty Trade. We'll look at it tonight. I'm going to close that down. Not no. Yes. Fuck you, Tasty Trade. No, just kidding. Already I'm going to swearing about Tasty Trade. All right, I'm logging into Thinkorswim now. Forced quit it, so we'll see if it even pulls up everything the way I like it. Nobody said yes, but you're all still here, so I guess, you want to see. Would you guys like to see how I put on the other side of that trade? The free trade? It's loading. It's just a nickname, Iron Condor. Don't let it scare you. So, the idea here is, look, we're going to sell 131. I already did it. We sell the 131 calls, this whole area above, and actually it's the 131 to 132, but we're selling that we're basically saying, price is not going to expire above 131 by the end of next week on coin. That may or may not be true. But if we can get 1, 2, or 3 days of theta decay out of it, and for 25% return, a profit, expected 25% of the expected profit in a couple days, that's the same, Like if we can get 50% of that in half the time, that's the same. It's the same return. It doesn't matter, So, if things start to get a little bit dicey and sketchy, then you just cut it out, get it out of there. Anyway, so now we take the other side for free. Like the 100 is what we were trying to do. So let me set that up and bring it over and put it on the screen. You guys can see it, I think, hopefully. And the return is double, correct, or more. It depends on what you're doing. If you put equal returning trades on each side, then you're doubling the amount you're making. Yeah. Let's see here. Okay, you guys can see this. All right, Melly. It's on Melly. How about that? Analyze. We go over to coin is where we were. Just focus on those 10 we got, not the other position on coin that I have. And there we go. And today's the 30th, yes. A week out. Yeah, well, I'll teach you that another week. Never mind. I was going to talk about Vega. Okay, now what we were talking about is selling the spread, the 100. And next week, that'd be this one, where I already have some options now that we just bought. The 8th of December expiration. So the 100. So we sell this one, the 100, and we buy the 14. No. Are we doing it? Yeah, that's correct. Okay. Buy the 14, and actually now we're only getting 4-cent credit. So I don't know if the options changed in their pricing or I had it set incorrectly. But that's not awesome. That's only $4 for like $90 of risk. But again, it's free money. So I'll still take it. But I'm just wondering if we went halfway between, like, let's say the 112, which was one standard deviation out, and we sold that. At one standard deviation, that would be 112, over right around here. This level, can you see that on my other coin graph? One standard deviation out 112 is, it's going to be between 112, at worst 112 and 103. 112 and 103. So 103 could be a level we think about. So let's just try selling the 103. 103, 102, and see, I'm only getting 3 cents credit for that as well. If I'm getting 3 cents for that, but 4 cents for 100, I might as well go for the 4 cents on the 100 because I'm getting more money for an even longer shot, which is makes it a higher probability to me, right? So there it is, up to 4 cents now. It's wiggling around. But if I did the 112, maybe something in the middle. Let's see. Let's try 108. Getting 3 cents for that as well. Seems to be a 3 cent spread, 3 or 4 cents across all these. So if that's the case, why wouldn't you take the most improbable one for the same amount of return? So that's what I'll do. I'll take the 100. 10 contracts. I'm going to type it in this time instead of pressing those buttons. And then we can take a look at what that would look like. Go over to the risk profile, and there it is. So now that is on as in simulation right there, because this is not a sent order yet, this one. So look what it does, right? It makes it create that condor, which is the bird with the wings, right? But more importantly, if you look really carefully, watch this. Watch the level of the blue line here. And we can see that it's $250. We know that from last time. I put that on. It went up. So it's $290. Okay, so I'm increasing my return for free. Might as well do it. But another thing that it did is it also lessened the capital requirement. 710 instead of 750. Remember that? So I'm getting more money for less risk for free by putting on the other side of the trade. Sometimes these are even more probable and things you can work with. And so therefore you can get a bigger amount, and that can really increase your return. But even as this, at 4 cents, we've got $290 potential return versus 710. So we say 290 divided by 710 capital requirement or risk. That's a 41% return we've just put together. 40.8, right? So now I send the order, confirm and send, and you'll see here, buying power effect, $0. So it has no effect. You do not need to put up any more capital. It's free. It's on margin, you know, but it's free. You don't even pay for it. It's not a loan or whatever. It's just the way it works. I'm going to just like for a moment try for 5 cents. Crazy. I'm sure I won't get it, but you know, why not try? I'm going to like set it up for to fill at 5 cents, and let's send. All right, the order's on. It's not going to get filled for 5 cents, but it probably will get filled for 4 cents. But I'm going to let it sit there for like an hour at 5 cents, and then I'll go to 4 in an hour. So you guys don't need to wait for that, but that's the process on setting that kind of stuff up. If you can do that, and you can read charts, and you can find situations like that where you're like, this seems like a good idea on this particular situation, then you can do it, you know. But we'll talk about tonight we'll talk about more of how to manage things, because it's easy to say and put on and then just let it run, and if it works out, it works out. But it's not easy to do, because the road to final profit could be rough, and there could be times in which you need to have some kind of an idea of what you're going to do if something's not working out. So we're going to talk tonight about exactly that, how to manage the trades once they're on. But we're also going to do a session, probably an opening session on that, of how to find opportunities on the charts and what to do with them, how to set them up, you know, what to do. Like this was a great idea. Like coin broke out of the 100 level, went on a fucking week and a half run, non-stop run. The market, it wasn't even respecting the fact that the market's been consolidating for the last like week and a half, 2 weeks. But now it finally is. And what is it doing today that it hasn't done before? It's putting in a low below a prior candle. And that's probably going to end up that way. And that's going to permanize. And it just stunts the progress, you know, so long as the market is stunted. And we know the market is stunted too. So we're putting it all together. This is a great trade. You know, if it doesn't work out, it doesn't work out. But man, it's a good idea. And it probably will work out. And the probabilities are very much in our favor. We have a 70% chance on this one up here. And the one down that I sold down here, it's 90% chance. And it increased the total ROC on this trade to 41% in 8 days. So if we get half of that in half that time, that, you know, that's a good spot to get out. You know, you're subjecting your capital to excellent ROI. All right, a quick look at everything else. SMFL is freaking flying. This is the one that I told you could go crazy. I guess it's been halted. It broke out of the pre-market pivot level of 286 and flew and hit 4, and now it's doing it again. It's at 350. It hit 370, Holy Toledo on SMFL. I'm telling you this. I knew this one was set up to go just like absolute wild, crazy, up, down. I had to watch it. There's some opportunity there. Wow, look at that sucker go. SMFL. Meanwhile, Minim completely fading. All right, well, there you have it, folks. See you tonight in class, everybody. All right, have a good one. See you in the group now. By the way, there's Mr. M Alerts. This is one of our old members who has become an expert at the kind of swing trading that I do. And he's alerting really good alerts that are basically as good as mine. I would hope. But the nice thing is like having two eyes on the market, you know, or four eyes, two people on looking at the market. His trades are as good as mine, I would say. And he's catching things and seeing things and scanning for things and finding things and alerting things that sometimes I don't find. You know, so good stuff in the Mr. M Alerts. Highly recommend that you give it some merit. CRM is bleeding out, and you're looking for that 5-minute dip buy entry on CRM for a swing trade for, you know, a week or two on that. All right. After Hours wondered who that was. I wonder what you're talking about. After Hours wondered who that was. Don't remember what you're talking about. All right.